joining us today. Sandeep, hi. What do you make out of this run up that we have seen in the last few days in the Nifty going up all the way to 24,300 plus?
Yeah, so Nifty has been gyrating in a range, so I don't think for the month of July it's up by any great extent. So I think it's just been rotational movements, sectoral movements here and there. Nothing very significant has happened in the Nifty except for the fact that the month of July has seen a resurgence in the IT sector and where that sector has outperformed most of the sectors.
Absolutely. Kunal, before we move forward though, any stock strategies or trades for the day?
Yeah, I'll go with auto stocks as one of the sectors, and from the auto pack, I would pick Tata Motors PV for a change. The stock has gone through 6 or 7 consecutive week of downtrend, which makes the risk reward extremely attractive for a significant bounce from the current levels. Would look at a target of 350 or 60 for Tata Motors PV and stop loss to be kept at 322. The second would be a buy on Sona Comstar, Sona BLW. That's another stock which has done exceptionally well. The stock has broken past above a series of major resistances on the weekly and the monthly charts, now trading at 750 plus levels. So we'd look at a target of 790 plus and stop loss to be kept at 753.
Sandeep, one sector which has been performing well is the auto pack. In the last 1 week, you've seen good amount of traction coming in there. You have numbers of Mahindra and Hyundai coming out. Today we have Maruti coming out. What's the kind of outlook that you have for some of these stocks?
Auto sector, I think, should do well. We've seen that the two-wheeler pack reported numbers earlier. Numbers were strong, and as a result, the stocks responded positively. Most of the companies are doing well, although there were some margin pressures in the first quarter. If you look at the commentary which Mahindra and Mahindra gave yesterday, I think they are seeing stabilization of input prices, stabilization and improvement of margins. And the very good takeaway also was that they don't see any negatives in the rural sentiments, and they actually see uh, the farm sector, the farm equipment sector for them actually holding up and seeing continued growth, which is a significant positive. So I think M&M, both from its growth perspective and valuations, looks pretty attractive as some of the two-wheeler companies also continue to do well. Maruti, we need to see the numbers and the impact on margins, etc. But outlook continues to be good.
Sandeep, what's the takeaway on Bajaj Finance? The FY27 growth momentum clearly is intact for them. The guidance upgrade is also possible after Q2, perhaps.
I think, and the numbers also are reflective of what's happening on the consumer durable side, where the growth has been strong and there are big players there. Disappointment was on the main front, so I think that's where and some more squeeze in margins could be seen going forward. But the key point is the stock is not cheap. It trades at around 5 times price to book for this year. Most large banks trade at, even the well-known ones trade around 1.5, 1.7 times. So it's not a cheap stock. So to that extent, a large part of the aggressive growth would already be priced in.
Okay, seems like the best could be behind. Kunal, check in on the charts for both Bajaj Finance and M&M for us. Actually, why just M&M? You talked about Sona Comstar, but within the auto pack, and let me throw in two-wheelers as well here, given the renewed vigor on both Hero as well as TVS yesterday, what's looking good from within the auto pack per se?
See, I think within the auto pack, there are new stocks which have emerged. Hero MotoCorp has made a good comeback. Bajaj Auto has been something which has been languishing. That stock has made a very good comeback in the recent past. M&M, a stock which has been struggling in the last, say, 3-4 months or so, has been stuck around the 3,200, 300 barrier. That stock is also trying to make a comeback. It's yet to cross above the long-term averages, but with this consistent attempt the stock is showing towards the long-term averages, I would believe that eventually over the next maybe a week or so, you might see the stock going to a breakout. The better performers which were already there for the auto pack were the likes of Eicher Motors, which is doing exceptionally well for the stock. TVS Motors has done very well for itself. The stock is already perched at a fresh highs above 4,000, 4,100 mark. over the last few days of steady momentum for TVS Motors. So the mix has been quite interesting for the auto pack. The only stock within the pack which has been a huge drag or an underperformer has been Tata Motors PV. But I think there are some ample signs on the charts that we may be looking at a potential turnaround or a bottom out formation for this stock also.
Kunal, HDFC Bank, we've seen some bounce back coming in after the kind of correction we saw. Do you still see a consolidation phase for HDFC Bank at this level?
Yeah, so I think it's now at on the weekly charts, so it's at a make or break kind of a point over here, because on the weekly charts there are some negative signals which have emerged for HDFC Bank. Now, generally what happens is if the stock doesn't see any major downtick post this weekly kind of a signal, then we generally look out for turnaround into the stock price. But if it does break, then we could be looking at least another 10% kind of a correction for HDFC Bank. So I'll probably reserve the view over here for the stock at the current levels. We'll wait for say another week or so. If the stock is unable to break below this 730, 720 barrier, then maybe I think over the next couple of weeks, then maybe I think the worst could be behind for HDFC Bank and the stock could start off into that bottom formation zone. However, if it breaks below the 700 barrier and gives a weekly closing below this level, I think the view changes quite dramatically for the stock on the downside.
The one very actively traded stock of late, Swiggy, that's going to be in focus after its numbers. While growth clearly seems intact for them, profitability is clearly deferred. If you just look at the individual segments, food delivery, extremely stable growth there. But the play is all about quick commerce, right? So if you just look at Instamart, growth is back, but again, profitability is deferred over there. Sandeep, you think this catch-up trade or, equal trade which was happening between Eternal and Swiggy, and there were days when Swiggy was a bigger mover than Eternal, that could get undone after these numbers from Swiggy?
I think the main point we need to consider here is the kind of valuation de-rating which Zepto is seeing in the unlisted market, and the fact that they are unable to come out with the IPO, and most of the value being ascribed to Swiggy or, for that matter, Zomato, Eternal now, is related to the growth in their quick commerce business. So I think what's happening in Zepto should have a negative impact on the valuations of Eternal as well as Swiggy, in my view. The second part is that Amazon now is becoming very aggressive on the quick commerce front in the large cities. So how that impacts these companies also is something we need to see. So I would think that after the recent rally, which we have seen in Eternal, most of the positives are built in right now.
Kunal, do you see some of that move in Swiggy at least getting undone? I know for both Sandeep and you, the top favorite is Eternal, but what about Swiggy? What's the read-through on the charts there?
No, I think I'll be a little positive over here for Swiggy, even if the stock goes into a correction. We were highlighting this point that the stock has a tendency of going into a very sudden kind of an abrupt 8-10% correction before it tries to go into a V-shaped recovery. Just 3 days back, the stock I think had fallen down to almost 250 or 240, and yesterday the stock closed at 290. So it has this tendency of going into that sudden bottom formation, and that's why I think the stock generally doesn't have too many takers on the investing side, but has too many, or rather a lot of interest on the trading side for Swiggy. But then on the volume charts, there are some very strong evidences that we are looking at the stock potentially forming a major bottom at this 240 levels. Eternal being run up significantly high. There could be an eventual catch up which could be done from Swiggy. So I would sense that if in case the stock drops down, say 4-5 percentage points over the next couple of days, I would take that as a good buying opportunity.
And from a other stocks point of view, you had Hyundai which came in with numbers. We had Mahindra there. So how are these stocks looking for you? And now today Maruti is coming out with numbers.
See, Maruti has been a different stock altogether, because it's been a lot more stable stock. The moment the stock had broken in the last year, I think 11,000 mark, from 11,000 to 14,000-15,000 plus for Maruti for a series of 2-3 months, and then a cool off back to that 12,000-13,000 for the stock price, where it's consolidated. So it's been a lot more stable stock till last year. I think previous year, 2025 mid, the stock was a huge underperformer with respect to many of the other four-wheelers, whether you compare this with M&M and such other peers. Maruti had underperformed. But I think so far in the last 12 months or so, the stock is trying to find its mojo back. Technically, there is a hurdle or a major hurdle for Maruti at around 13,500 to 13,800 levels. This coincides with the resistance just above the 200 moving average for the stock price. But I sense that with the renewed vigor which has come back into the auto pack, Maruti should also be able to break past pretty quickly above this major barrier point.
Specifically, Sandeep, what is it that you're liking within two-wheelers? And after the massive move which has played out and now the Hero MotoCorp catch-up as well, would you recommend buying or rather adding positions to any of the existing names at these levels?
Levels are tough to find, but I think what we continue to hold in the two-wheeler space is Bajaj Auto, where I think the outlook both for exports as well as the domestic market remains strong. What I also like is TVS Motors, but then I don't like the valuations at these prices because fundamentally, both on the domestic front, the domestic EV, as well as the kind of momentum now they're getting on the export side is very credible. So I think longer term, TVS should also do well.
And Sandeep, from a defense point of view, you had decent some set of numbers which are coming in from defense companies, whether it's BEL or Mazagon or others. How do you look at some of those stocks?
The numbers are strong. Outlook continues to be good for many of the companies. There's some sort of fatigue coming in from the investors' perspective into defense stocks because they outperform the overall market so much over the last many quarters. So I think we could see a phase of consolidation in defense and defense-related stocks. Overall, like some stocks could perform here and there before the entire sector again does well because the indigenization as well as the export opportunity both are pretty large.
Sandeep, you've liked the FMEG space quite a fair bit, right? And now it seems that the bigger threat of, what would happen with regards to a weaker monsoon, its impact on inflation, purchasing power, etc. A large part of it at least seems behind us. What within some of these consumer durable companies are you liking, and what would you recommend buying even at these levels?
So I think we've lately bought into Havels, which I thought under 1200 presented good value. And among the other companies which we hold, I think Voltas continues to do well, but I think we need to watch out. Valuations are not cheap at this price. But V-Guard came out with very strong numbers and gave a good outlook. I think that stock looks reasonably valued because the stock peaked out at about 500 couple of years back and it's trading near 300, 320 levels. So I think that should be one company which could actually potentially do well.
Sandeep, one theme which is now gradually coming back is the rural theme, which basically, if you look at how Hyundai spoke about it, you had Mahindra speaking about it, and some of the FMCG companies are also speaking about it, about the kind of, again, the boost coming from a consumption point of view. Which are the sectors or companies that you will look at, given the fact that the urban growth is slow, but rural has again picked up in this season?
No, I think there are no real specific only rural plays, like except for the fact that maybe some of the agrochemical companies, etc., has got beaten down because of forecast of poor monsoons, etc., or maybe some fertilizer companies, etc. Although the dynamics are very different for fertilizer companies, could see a comeback as monsoons normalize because the recent numbers of monsoons for July indicate a normal monsoon as against expectations of below normal monsoon. But I think so it's a broad theme you have to play. So many FMCG, durable companies, auto companies could have seen a deterioration in performance if rural would not hold up. So if rural is likely to hold up and because of relatively stable interest rates, urban demand also continues to be strong, then I think we could see the overall sectors do well.
Well, Mazagon Dock definitely is going to be one such stock to look out for. In fact, many of them actually from within the defense pack. Mazagon, the EBITDA has jumped up about 48%, margin expansion of 369 basis points. There's Garden Reach then. They're looking at making 4 platform supply vessels for ONGC. It's an order win of about over 1,000 crore rupees. So look out for what that stock as well does. Astra Micro, they've bagged a 2,200 odd crore rupee order from HAL for Uttam Radar. So that's the other stock in focus. Kunal, any fresh trades from within defense?
Yeah, I think Palace Defense is something which is looking attractive at the current levels. The stock at 1200-ish odd is taking a good support. There's a retracement zone for Palace Defense. HAL, I think, is the other one on the larger cap front, which is still looking very attractive. In fact, out of the few, the major larger cap names, HAL, BEL, etc., HAL is the only one which is perched closer to a breakout of the previous highs. The other names like Bharat Electronics, Dynamics, etc., these stocks are trading at the lower end of the price trend for themselves. So which means that if in case there is any kind of a leadership move, it could probably be led by the movement of the price movement on HAL. Most of the other stocks on the defense side, the likes of Mazagon Dock, GRSC, Cochin Shipyard, etc., these stocks are going through a patch of consolidation. So we need to wait for a point where these stocks come out of a consolidation and then go for a buy.
Sandeep, just wanted to get your thoughts on the IT sector. This week it's up nearly 8.5%. For this month, it's 18%, outperforming the benchmark. Do you think this is a catch-up rally for IT, or it's again it's a churn which is coming with some flows coming back to IT?
It's a combination of all. The stocks got beaten down too much, and as we've discussed in the past, that they continue to be high cash flow generation companies trading at low teen valuations. So there was always an expectation of a swing bounce kind of phenomena, which has now happened. So we've seen the stocks rally substantially, and some short covering both domestically and globally has also contributed to it. I would think that there could still be some more upside over the next few months, but in the near term, the rallies got extended a bit too much, and we could see some consolidation correction before we see some more upside. But I would think that the upside from here is very limited.
Tata Steel will be the other one, largely inline set of estimates like we just flagged off earlier as well in the show. The India EBITDA, though, is at a 16-year high. So clearly, the India ops continues to be the earnings driver for Tata Steel. Europe continues to be a work in progress, really. And that has always been a sour point for Tata Steel for quite many quarters there. Kunal, anything that you're spotting within metals as a trade?
Yeah, I think Hindalco is the one which is looking attractive. The stock in the last 1 month has, I'll say, the pace of selling has halted quite significantly. The stock has completed a mean reversion towards the 200-day moving average. I think 2 days back or 3 days back, the stock made a low of around 940, 950, which also coincided exactly at the 200-day moving average for Hindalco. And then compare this with the past 3 months highs, the stock was almost at 1200 plus. Now from 1200, the stock falls down to 950-ish, which means you're looking at a 20% correction, which is already completed for the stock. So I think in many fronts, it looks like that Hindalco could be a good bet at the current juncture.
Sandeep, another sector which has been, doing well is the metals one. You had Tata Steel numbers which came in. You had Vedanta Aluminium numbers coming in there. Tata Steel surprised with respect to realizations in Q1. What's your take on the steel and the aluminium stocks?
So I think a large part of the metal rally is behind us. Typically, these stocks are very much linked to the movement of the underlying commodity. So as those commodity prices stabilize, and we are also seeing some sort of correction in many metals, I don't think that there's any big upside overall for the metal sector from here on.
And do you have a preference between steel and aluminium?
So if you look at it fundamentally, I think the aluminum the base metals, including aluminum, have a better story vis-a-vis steel, because steel prices have moved out due to safeguard duties, etc. Globally, steel capacity still continues to be very, very high, and there's a global overcapacity. Because of protection, many of the steel companies have done well, whereas there could be genuine shortages of base metals going forward. So I think if you look at it fundamentally, base metal companies are much better off than steel companies.
Sandeep, I'm curious to know how much gold and silver allocation do you have in your portfolio right now as a percentage?
Not much of silver, like gold continues at 10-15%, but I think after gold crossed 3,800 in the last rally, so after that we never bought. So I'm not selling gold, but I'm not buying also.
Kunal, maybe you can throw more light on where you see gold headed and, of course, silver as well.
Yeah, so I think gold could be the major one which could be leading. So, in every cycle, there is within two asset classes which can compare themselves with each other. In every cycle, you can probably sense that which are the ones which have been an underperformer and which could probably try and cover up in terms of catching up with the underperformance. In the previous leg, silver was a class outperformer. I think in dollar terms, for example, we were almost at 36, 37 in 2023-24, and we moved up to 120. In the same time span, gold on dollar terms was around 3,000, and we moved up to, I think, 5,000, 5,500 on the gold prices dollar term wise. So I think in that sense, I would probably sense that now the cycle seems to have changed, and there could be a very strong possibility that gold can outperform. So I think my advice would be to have major weightage in terms of gold out of the two asset classes over here. But I also sense that this level of sub 4,000, which gold prices tested last month or this month start, I think those supports of 3,750, 850 for the gold prices are very strong support. It's also entered into an oversold territory, which means we could be looking at a series of bounce for the gold prices over the next 3 to 6 months at least.
Sandeep, a final question to you is basically on the pharma sector. You have Sun Pharma coming in today. What's your view on the Sun Pharma and maybe the entire other Indian pharma pack?
So I think large cap pharma companies like likes of Cipla, Reddy, Sun Pharma don't have much of a great story at this point of time. I think wherever the action is, it's more on the CDMO space, the smaller pharma companies. And I think that's a sector where investors who understand those sectors need to have a look at. So it's very molecule driven, high capex, cash flows are uncertain. So I don't typically invest in that sector, but I think that's where the momentum is.
Sandeep, always good chatting with you. We'll let you go on that note. We'll see you again next week with